What's up? Good morning, good afternoon, good night, wherever you're at around the world. Thank you for tuning in here to the BitLab Academy daily live stream here on our BitLab YouTube channel. I really appreciate y'all being here. My name's Kelly Kellum, and it's my mission to bring people along in this crypto ecosystem, to throw the rope back and pull people back up to the front, pull them up to the front so they can understand exactly what's happening in the markets, what's all this lingo happening on the, when you're tuning into various YouTubers, and also just how you can best navigate so you can be consistently profitable and stop losing money and making the right picks in terms of trade decisions, as well as what different projects. And I'm not going to tell you exactly what those projects are, but I'm going to show you how professionals in this space go through making their decisions on whether it is trade entries and exits or what asset to invest in. So hit that like button, hit that subscribe button, ding that bell. We're building a wonderful community here. I want to shout out everybody here in the chat. We already have a pretty darn great community of a lot of regulars I'm seeing in here. Matt C, Newark JK, of Mellow Fellow, Justin Eubanks, King Peasant. Almost everybody in here I see as regular. So shout out to everybody here. Make sure if you're watching on one of our other like Hit Network 24/7 stream that you go to all of these links right here. Make sure you're following the right stuff. Check out bitlabacademy.com. But we're going to go ahead and dive right into the computer today so we can get through all the stuff I want to get through. Make sure you're following BitLab Academy, which is at Academy BitLab. Of course, make sure you come over here and follow me, which is at Kelly Kellum. And I post a lot of great stuff here as well. And we're going to reference some of the stuff I'm posting on most streams. And then, of course, as I said, make sure you come and check out bitlabacademy.com. Sign up for this newsletter here. You get entered to win 1 month free access to the courses and to the indicators, the paid indicators that we have here in BitLab. So definitely check this out. And if you want more information on the indicators, just come here, go to indicators, and all the information is right here. But we're going to go ahead and pause for a moment and say, how are you doing? How was your weekend? I hope you're well. Did you trade this weekend? Or did you have an action plan just to relax and stay out of the markets and just have a good time with friends and family, staring at the sun, hugging a tree? Because sometimes we need to do that. We need to remember in this market that it's not only about always being in a trade, because as a lot of professionals will tell you in this space, sometimes the best trade is no trade. Sometimes just relaxing and letting your, taking in other information, letting your focus be on other things, and then coming back to the market, looking back at the charts that you already have, you'll see new things. You'll be fresh. You won't be anxious. You're not kamikaze trading, doubling down because you took losses. So just want to shout out to everybody. And again, please hit that like button, subscribe to this channel. We're growing rather quickly here, and we've got an incredibly encouraging, wonderful community here. So let's go ahead and talk about what's going on in the charts today. So first thing I want to talk about, and of course today's title is based around some of the signals that are out there indicating that the risk on sort of mentality is kind of being a little hinky right now. It's kind of being questionable about what's going on. Because what we want to do, and I'm going to come back over here for one moment, and just let me know, just give me a thumbs up or give me your favorite funny emoji. If audio's good, video's good, everything's coming out good on your end, it's not clipping, everything's A-okay, and we'll continue this on. And also, I did put a poll up there at the top trying to see what y'all's sort of the community vibe is on what's happening with what the market's doing this week. Do you think a pullback's coming? Do you think the bulls are going to fight through this and actually continue higher? Let's just see what the community says there. But I do want to bring this back up right here, and I've referenced this a lot because this is critical in understanding what's happening in the market cycle. We want to be part of the smart money accumulation, not part of the hype cycle buyers with no conviction that just capitulate and you think, crypto or Bitcoin's a scam because you bought it at the top and then it goes down. Well, there's a lot of signals that give us indication of what's happening in the market. So we want to identify these areas where these smart monies are buying, whether it's here or once we get a push up and a pullback and we get another opportunity for another opportunity zone for a buy. So looking at this chart that I just pulled up, remember, we're trying to identify these zones that are early in a bull market to where we can really start layering in a lot of money Not a lot of money. Let me take that back. Where we can really start finding our entries and start finding the opportunities where in whatever assets we're investing in, whether it's Bitcoin, Ethereum, Cardano, AVAX, whatever it is, so that we can take advantage of as much of this bull run as we can. Okay, so let's go back to this chart here, and let's look at this interesting graph from Game of Trades, which you can find here at Game of Trades _. And we can see dumb money, confidence extremely high, and dumb money, meaning the people that aren't really looking at the aggregated data. They're not really diving into the nitty gritty of what's happening with the economy, with monetary policy, and they're buying the hype of this move because they are. Nobody's trying to buy a top. They are buying because they think, oh, maybe it'll go higher. But when people buy hype, which right now, this is still hype. It's kind of disbelief, kind of hype, because what have I talked about on the stream so far over and over is that this does not signal that we are in a bull market, because we have a few candles to the upside. In this case, 1, 2, 3 candles to the upside, 3 weekly candles, as we can see right here. I'm on the 1 week for Bitcoin. This does not mean that we are in a bull market. Well, why is this? I'm not saying that we are or aren't. What I'm saying is we need to, as traders, as investors, as somebody trying not to be dumb money. I don't want to be dumb money, and I've made a lot of dumb money decisions. But it was through all those stupid decisions and those losses, and then me adapting and changing my knowledge and learning more, and then adapting my strategy, trying again, failing, adapting my strategy again, and refining over time, changing what I'm doing so that I can be more accultured and understand what's happening in the market more broadly. So on a more focused level, I can make smarter decisions. And that's what I want for you all. I want you all to be able to feel confident and make smart decisions. And if in the cases that sometimes we do make a silly decision, we have conviction and we don't just capitulate selling under the price that we bought at, because that is not what you do to make money. You don't buy high and sell low. No, you buy low and sell high. And so in this case right here, we see the dumb money confidence is extremely high. Now, this does not mean that the market's going to completely roll over, but what it's saying in this case, it's not just that dumb money confidence is high, but also smart confidence is extremely low. So this means smart money is not at this current moment is not supplying liquidity and buying pressure to the market. So if there's no long-term holder convicted sort of mindsets within the space, the fewer long-term mindset, strong conviction people you have in the space, the weaker the price action is, because there's nobody to come in and buy any sort of variation in price to the downside, because they're waiting for a lower price. So now, of course, this is, of course, this is of traditional assets here. But as I've discussed over the entire, I think all of last week, Bitcoin and crypto in addition to Bitcoin, but Bitcoin as compared to traditional markets is still sort of thought of as risk on asset, high risk. It's not something like stocks, bonds, treasuries, like these blue chip sort of huge market cap, massive liquidity sort of players that tend to have less volatility, meaning less risk. Bitcoin has higher volatility, but I just want to shout out here. I'm going to go straight to full screen. We need to realize we cannot be mad at volatility in Bitcoin and crypto, because if we're upset by that, then it probably wouldn't have brought us into the interest in it in the first place. If we're excited for volatility to the upside, you have to be okay and aware of volatility to the downside. It doesn't just go up. It does go up over time, but along with those large pushes up, like we had from 3,500 in 2019 up to 14, back down to 3,500 up to 64,000. Okay, the downside price action was fierce and shook a lot of people out. But what do we see on Bitcoin? Let's go back to the chart. What do we see on Bitcoin if we zoom out on auto? I have this auto scale. We have massive volatility to the upside. I'm going to press shift and click on the screen to get a measuring tool. We got 449% to the upside. Okay, great. I'm actually going to switch this and go to price range. Boom. So we have, let's just go from these candlesticks. We have this sort of amount of price action to the upside, 449%. Now we have oh man, we have this huge drop, but let's look at it. But then we have a 80% drop to the downside. Okay, 83%. But then let's look at this again. This is, okay, we have an 80% drop to the downside, but then we have a 260% to the upside. Now, the percent to the upside becomes more dramatic because this function with downside price action, bearish price action, is only the percentage of the move downward of this entire move from low to high. This function, the downward price action, this is only 80% of this move. Now, this 260% is a multiple of this low. So each time we have a pullback, we get a new higher high when we're looking at the macro. And this is why we need to understand when we're looking at these various things on the chart that this is smart money, because we're seeing what in these cases where smart money accumulation is coming in. It's because the smart money starts gaining confidence when nobody else is looking at that price action, when nobody else, everybody says, it's, you know, we got here to 3,500, 3,300, and everybody goes, it's going to go to 1,000, it's going to go below 1,000. But smart money was buying at these levels. Same thing where we're at right here. We saw smart money come in, but the price pushed up. And now the reason confidence is low is because when we zoom in on this, and I'm going to hide all the lines and stuff, all I want you to see is these different moving averages. For this, I use the 4MA. It's a very simple moving average indicator, free one. But I have it 21, 50, 100, and 200 because this is a weekly. This is a 200-week moving average, 100-week moving average, 50. And we can see what color, if you're not sure what it is, come over here to style, and you can see each color of each one. But what we can see right here, this is a 200-week moving average. And this is a 50-week moving average. And basically we're getting a death cross on these on these as it relates to the 50 and the 200. But look right where price action is finding some trouble. It's right necessarily at this level. Not only are these two moving averages crossing, but let me turn back on the lines here, and we can see that this is also the previous high on this this area. A lot of people are waiting for this price action, for the bullish, the buyer, the sentiment to come in and overtake not only this level, but this level is perfectly, look at this, it goes perfectly in between these lines. This is a huge point of confluence and essentially resistance. And resistance and support is everything when you're trying to identify, most specifically, where the best trade entries and trade exits are. And in this case, this was a great trade entry. This was, I'm going to take this off auto. This was a great trade entry down here. We saw, and I'm not going to outline it again right now, but we saw the massive bullish RSI divergences and MACD divergence, and we saw money flow coming in. We saw a lot of signals that was indicating that this was a good opportunity. And what happens? We rip to the upside. Now, the price is not going to go in a complete straight line from this straight up like this. No. What's going to happen is, and this is what we're planning on, is the price to push up, the price to pull back, prove the move, the price to break this level and continue to the upside. So what we're doing right now is we're going to look at some of the signals that are suggesting that the risk-off mentality is sort of entering the market right now. There's a little bit of a cool-off period. There's a lot of disbelief in the market right now because of the sort of very questionable landscape of the global economic situation, inflation, the U.S.-Chinese tension, what's going on with Ukraine, all of these things that you hear about on a daily basis from nearly every different crypto YouTuber and even CNBC and all the talking heads talking about financial assets. So what we're trying to do here is identify the 3-cycle strategy that I've told you about over and over, and that is, let's scroll down here, is pulling this market cycle trading cheat sheet and remembering we have a macro cycle, a midterm cycle, and a micro cycle, meaning let's say the weekly, the monthly, weekly, the 3-day, daily, 12-hour for the midterm, and then everything, you know, let's say 4 hours and below for the micro. Looking at noticing that we have a macro structure we're in with the midterm structure within that, and then another micro structure within that. So let's continue on through some of these charts. So dumb money confidence is high, signal signaling that if there's dumb money confidence high and there's not long-term confident sort of minded people in the market, that means that there's weakness at those levels because there's not going to be buyers that come in with conviction. And this is critical to understand. This is critical to understand on the markets. Okay, so we need to remember that this strategy, the macro, midterm, micro, macro, midterm, micro. Okay. So now going in, zooming in, or continue on here, we see fundamental. I don't know why I had this up. I think I wasn't planning on sharing this, but we're having still a huge amount of fundamental use case and development on Bitcoin. So that's excellent. But here we go. Midterm risk levels. This is very similar to this level right here when we're talking about the dumb money confidence and the smart money confidence extremely low. We continue on here. We can see this has marked the top in the bear market throughout 2022. So these are this was the top of this bull market, but then we have a relief rally and we get this peaking, and then we get the top of this relief rally, we get this peaking, and it continues down. And now look at this. This is at the crux of the argument of risk coming back out of the markets because there are higher risk levels. If there's high risk about or uncertainty about where markets are going, because of monetary policy or inflation or whatever, it doesn't matter, earnings, whatever it is, it doesn't matter. All these things are playing into this mentality of maybe I need to take my money out of investments and put it in something safe, like the traditionally minded stuff like bonds or traditional blue chip index funds or treasuries. All these sorts of things that are thought to be more they're going to be very low yield in terms of you're going to get a lower percentage, but there's also much less risk, if any, depending on the asset I'm talking about, of downside price or downside valuation in those assets. And Bitcoin, of course, if risk comes out of the markets and the markets start tanking, then we start seeing, we very likely could see a rejection here and a continuation down here, maybe back up, and then break down. We're still not out of the woods for continued price action to the downside, finding support, hopefully very much so above the, I'm not even going to talk about the wicks, but let's put a option J there for the lows here. Basically finding support above 16,228. Now this is a bearish scenario, and I don't think this particularly is going to play out. It very well could, and I'm prepared for it, but I do think this action right here, looking at the price action, we're going to zoom in just a little bit. I'm going to go on auto. Looking at this level right here, we have this previous high right here. We also have another previous high right here at 20,900, so basically 21,000. I'm looking at this level. If we zoom in a bit, I'm looking at this level here and then this level here, 19,700 or 21,000, around 21,000, 21,002. These levels here are the levels I'm looking at. And why is this? Well, we have this previous top right here. I'm going to make this much brighter so we can see this. So 21,300. So this is a previous top. And if we lose that, then it's okay. We have a plan in place to navigate what's going on. But let's go ahead back and zoom out. Let's zoom out and talk about the risk coming out of the market. Now we're going to continue on here with what we were talking about: smart money, dumb money. What we're talking about with the difference between the smart money and the dumb money right now, and if we're in a risk on or risk off mentality, we have to remember, why am I showing this also? This is very bullish, because what we need to realize is this is the three market strategy. We have the macro, the midterm, and the micro. Okay, so then why am I showing this? Because I'm showing you a bearish outlook on the potential midterm or short-term price action, meaning within the next 2 or 3 weeks, we could have downward price action. But the grander context is the battle between being here, where we're already past this level in the upside, or are we still battling, down in this region here, trying to prove this move, which I think, and a lot of people, other analysts in the space think as well. So is this trying to prove the move, or can we confirm our bull market? Meaning we get that move to the downside, we get the confirmation of flipping this to support, and then we move to the upside. So we see price momentum oscillator. flipping bullish. Each time it's done this, this has marked essentially the start of major bull rallies, many months. This is late 2015 all the way through the end of 2017. So that was a 2-year bull market. Of course, this was early 2019 all the way through the end of 2021. And of course, we had dips along the way, and you have to be able to be prepared for that. But where we're at right now is suggesting, especially as I've talked about, and I'm not going to go into it on this stream because there's too much other stuff to talk about, but we've talked about the 4-year cycle over and over and how important that is as to where we're at on price action and what part of the bull market or bear market or accumulation phase, which I do believe we're in now. Now, this is kind of irrelevant to me. I'm looking more at the actual determination of, are we wrapping up a bear market in the process of starting a bull market? Well, we very well could be. But the most bullish thing that could happen right now for us to confirm that is a pullback. So nobody should be upset or fearful about the pullback that may come. It is needed. It will reset a lot of momentum. It will reset a lot of strength in the market so that the next actual, if we do confirm, this is what you guys, whatever guys and gals need to understand. If we do pull back and find with authority support at this level, look at this cross, this previous price action top, and this massive macro downtrend, which we have right here. If we find support right here around $21,300 for Bitcoin, and buyers come in, volume comes in, okay, then the bulls have their confirmation and the liquidity will come back into the market, and it will be a lot more fierce of a move from this. Because if we pull up the VPVR, let's do VPVR. Actually, it's just type volume. There we go. Volume, visible range, volume profile. All right. Now, what I like to do is I like to double click on my indicators, go into setting. Where is it at on here? Inputs. Go into setting row size. I like to do 200. It gives me a lot better resolution. You see there. And what we're watching right here is we're sitting right on this shelf. We're sitting right on this shelf, meaning there's a lot of volume right here that's holding us up. Because of this price action, if I look at nothing else, in the grander context of the economy and the market, we can see that this is momentum increasing to the upside because we see small green candle, huge green candle, but then this gets a little smaller, this is rolling over. So this is indicating already this is only looking at the weekly. This is indicating that momentum is waning. And all I'm using is looking at the candles. But now if we zoom down on this, let's go to the daily. We can see this taking place. This is trying to push up, rejected, and now it's breaking down. And this level is, if we don't hold this level here at the $22,500, then look at this gap in volume. Absolutely nothing there. The next thing, if we were to fall below this, you have to understand it's not that just price is falling. It's that there's people that have gone long at various levels here, and especially as we've moved up, people have moved their stop losses, and we have people that are leveraged long here, especially people it's being long from down here is fine. But if you're long from up here and holding on to it, then it's kind of, I'll call it an unprofessional move in the market because you're not being aware of where we're at. We haven't confirmed this move. We have not rolled over. And found resistance and then broke this high right here. This is one part of the confirmation. This is a conservative part of the confirmation when we break this high and then rocket up to $28,000. Now, understanding that there's a lot of liquidity below this, that as this rolls over, because what did we talk about before? As this rolls over, we have a lot of dumb money confidence in the market. This isn't just in traditional assets. This is also in Bitcoin and crypto. So when we see this rolling over, and we know there's liquidation points, we know there's going to be weak hands in the, less cultured long-term players, that as soon as it starts breaking down, this is going to come down rather quickly. Also, because we have no volume. If we zoom out a bit, we get a little bit more data. There we go. We still see, even with that, there's a huge dip in volume here. So if this were to fall here, and this is riding on, I think this is a 21 MA, moving average, this red line right here. If we lose this level, very quickly, I think we'll at least come down, maybe wick past, but find support on this volume profile. We can see this is a volume profile, how much volume is traded at each one of these price levels. That's what this VPVR is, or VRVP, depending on which version of the indicator you use. Same thing. So we're seeing weakness here, and we haven't even pulled up our indicators. Let's pull up, let's pull up our indicators. Let's go back to the weekly. We're seeing the MACD rolling over. We're seeing RSI finding a little bit of resistance here at the 59 level, rolling over. Stochastics fighting to stay up top, but let's go back down to the daily, and we see this is starting to lose. This is starting to lose the highs, and I'm actually going to put a star on. Star on that. That way I have a cross down here. So this is starting to lose the highs. The MACD's flipped bearish here. What we want to see is this price action pull back. And for this RSI, I'm going to do option J here on the RSI. You can put, it doesn't have to be right on 50, but right around the 50 mark. We want to find support here and push back up. So if this were to fall down and find support at this level, which also let's pull back up to VPVR, volume range, visual profile. I'm going to save this. I'm going to save this into my templates. You see I have my various templates here. If you haven't yet, go over to the BitLab Academy YouTube page and scroll down. We're going to come here and come to playlist. Come over here to Daily Alpha. View full playlist. Come and check out this video if you have not watched it yet. Pro Trading TradingView guide. I do a lot of quick keys, how you can navigate, set up your templates. I really recommend it for everybody. But what I wanted to say here, I'm going to save this actually. Save template. Where is it at? There it is. Save. Yes. So now I have it with the VPVR in here. We have no support in this region because there's no tops. There's no tops in this region you see right here. You can see this pointed out. And if this were to fall over, we have the MACD crossing. Stochastics are trying to fight their way across, but let's go down to the 4 hour. Let's get better resolution. We're losing moving averages. We've lost the 20. We've lost the 50. We've lost the one. I think this is the 100 or the 150. So now we're below this move. And this is coming up with not much authority from the buyers. We've lost the 50 level on the 4 hours. So this is signaling that we're not, the bullish sentiment is starting to wane in the market. Now the stochastics have fully reset down here to the bottom, but they very well could come up here. We can see this on the bottom, but they very well could come up here and get rejected and come back down. So there is weakness in this market. If we even go down a little bit further down to the 1 hour chart, we could see that this has now fallen through a lot of this price action, and very well could find resistance here. And then look at this gap. Look at this volume gap. Huge volume gap. So the point with all this is that we need to be patient with what's happening in the market. And if anything, if you're frustrated with this not just rocketing in the moon, then you have a poor action plan and a poor perspective on the market. Because in reality, looking at this, seeing that a lot of people miss this move, let this come down, let this price action roll over, and hopefully even wick past this. Make let's say on like a 1 hour wick or even a 30-minute wick for this to, as this comes down and people get liquidated, people get scared, and wick down to this level and then come up and move to the upside. That would be so incredibly bullish, because what would be happening is the market makers, if they're trying to fake out to the downside and it does become a wick and not a continuation to the downside, but just a very quick move with, I would say within a 4 hour period, preferably under a 2 hour period, and buyers come in with strength here, then this is one of the most bullish things we can see about where price action is going for Bitcoin in the midterm, being over the next through February into March. So I'm going to pause here just for a second. Shout out to everybody in chat. If this is your first time, my name's Kelly Kellum. Really appreciate everybody being here at the BitLab daily live streams. We're trying to break down everything going on in the charts and explain how and why the professional analysts and professional traders, institutions, how to interact with this market in the best way. Basically bridging that gap from beginner to pro. So if you haven't yet, hit that like button, hit that subscribe button, ding that bell. It really helps build the channel. And shout out to everybody in chat. So I'm going to open up, I'm going to ask you all some questions. I'm going to to propose that you guys ask some questions to me, because in about 15 minutes or so, I'm going to try and answer a couple questions in here. So put hashtag sticking point and write something that you're having trouble with right now, or you want to know more on, whether it's a particular indicator, whether it's stop losses, setting risk, whatever it is. I'm going to try to answer 3 of them before we wrap out. But yeah, absolutely. And I'll just shout out again to a bunch of people in the chat. Crypto Billy 111. I see this dude everywhere in the crypto space. Shout out to him. Special shout out. Matt Lane, Crimson Caravan Company. Always seen that person. Alex Green, my MVP here, always helping out. Really appreciate him. Always posting links and everything. And if you haven't yet, everybody, definitely please go and check out bitlabacademy.com. We have some massive updates coming this month, starting this month. New website, 25 plus new courses, over 200 new lessons starting to roll out. We have the indicators, which I think we got some updates coming to those indicators as well. So definitely check these out. But let's go ahead and jump back into the markets. Let's look at some of these things. So now I want to pull up the BitLab trading indicators and look at these things on a little bit of the macro. And actually, we're going to start with the midterm because all of us are very familiar with the macro already. So if you're not familiar with the BitLab trading suite, the flags on top are bearish divergences, and this reads various bearish divergences within the market, so you don't have to have every one of those indicators up. I'm going to put this on full so we can see what those divergences are, but we're seeing a lot of indication here. Now, one of the things I want to point out with this indicator series, we saw on the daily, look at where this H is right here. This is a hidden volume. Specifically, I'm going to put a option V for a vertical line. Look at where this called a bearish divergence, which is very bearish on volume. Bearish divergence on volume precipitated this pullback right here. This is also following a massive overheated sort of indication here with the BitLab significant movement, showing that this was an overheated move to the upside. And then we get the bearish volume to follow that. And along with that, we can also see on the relative extrema that these bars right where the bearish hidden divergence on the volume was, this extrema was saying this is overheated with the bullish, even holding where it was, likely a pullback was in play, and we see exactly what's happening. And when we're looking at what was happening with the moving averages, we saw that things are starting to push below them. So if we come down here, let's go down to the 1 hour and see what's going on here. We pushed into this zone here, followed with complete bearish divergences each time we touch this. RSI, relative extrema. Now, the bulls we can see they're really giving a fighting chance. They're trying to hold the support, but we see the price action falling through the EMA ribbon here. This is a BitLab Market Intelligence EMA ribbon. It colors with the colors change with the different pressures in the market changing. So as trends change or support changes, the color changes. And we see the bulls are trying to hold this up, rejection, and it breaks fully through the EMA ribbon. And as this rejects here, this has the EMA ribbon completely flip upside down. And now this is a point I wanted to make. We are pushing to the upside, but look where we're having 1 or 2 divergences. Now we're only pushed halfway up into the EMA ribbon, and we get 5 bearish divergences: MACD bearish divergence, RSI bearish divergence, relative extrema, on balance volume, and even this is a hidden volume, which is the external. And what happens? What happens when prices reject to the downside and continue down? This is what they do. They push up. It's typically around 61.8%, around the golden pocket, or into an EMA moving average cloud, and then get rejected, and then try to push up and get rejected. So once we've determined something's rolling over, then the resistance line becomes something that you need to pay attention to. And so when we're looking here, we've got a bit of, I can do option T for a trend line. I'm going to click there. Now I'm going to find where this, look at this. So this is from the top, resistance, rejection. Once we attempted, once we finally touched it, rejected. Now we're pushing up near it again. And in this case, I'm hoping for a macro uptrend to really come into play, but you have to understand the macro, the midterm, and the micro. Here I'm on the micro because I'm below the 4 hour. So on this trend, on this sort of market cycle, we need to understand that we've just rolled over and we're now finding resistances. So we are in a downtrend on the 1 hour on the smaller time frames. So this was the attempt, this almost this whole area here, but really specifically here would be akin to this region right here. Once we've established these two resistance points, which we have, boom, boom. Now, anytime we get to this point, until we come through this with authority, retest it and flip up, we are in a downtrend on the smaller time frames. Now, looking at what's going on the BitLab market intelligence, hidden volume, relative extrema, significant movement, this was showing that there was a bit of a trend floor here, but it got, this, even with here, this trend floor, it wasn't even able to make it back up to this resistance line. So there's a lot of questionability within the bears and the bulls right now. So, especially with the bulls, I should say, and we're starting to see this roll over. Now, what I want to point out here, and if we come back to the daily, let's go to the 12-hour actually. One of the things that we can utilize in addition to any indicators, any of the indicators, the trend lines, is understanding that you can read the market, that you could read what's happening with the psychology of the market just by being aware of what's happening with the candlesticks on the market. We're just wrapping up the candles, the whole candles course, where we break down every, the most important candles within price action. So you can utilize reading price action on a chart as an indicator in and of itself. So all the other additional indicators that you may be using will be, basically like you can have a weapon. Okay. Now you can look down it with iron sights, and you might, of course, if you know how to do that, excellent. But then if you get a scope, and that's essentially what we're doing here. These are our iron sights, and it does give you good indication looking down, where your target is. But then your indicators really bring it into a lot more focus. But if you can't master understanding just reading simple price action data on a chart, I want to give you some hesitation on getting other indicators until you really understand the price action, so that then you can utilize your indicators in conjunction with price action so you get a much better read. So for instance, right here, we can see the price action is trying to pull back, but then we get a spinning top candle, another spinning top kind of doji candle. These are indecision candles. So this was trying to go to the downside. We get rejected back to the upside. Now we have a shooting star candle, which means it's similar to these, rejection back to the downside. And then coming down, we're able to utilize our knowledge of what's happening, reading the psychology of the market through the candles in conjunction with our indicators. Now, if we come back down, let's look at where we're going today. We're back here on the daily. We're trying to get a push up. So how do we see whether or not this is, I'm going to hide this for a moment. How do we see if this is an honest move to where we're going to, rocket back to the upside? Well, first, let's take a fib, which is Option F or Alt F if you're on PC, and go from the top there to the bottom. And look at this. So this is from this particular very micro local move. A lot of people only do a fib on the full move. You can do fibs on every move in the market. And look at this, right where the golden pocket is, 0.618, 0.65. This is perfectly in line with where this downward trend resistance is. So these two confluence points met with also being in a downtrend. Unless something comes into the market, we can't plan for all news and all things that are happening in the market. But what we can plan for as a technical analyst is, barring any big news like Amazon just bought, $10 billion worth of Bitcoin or something like that. Barring that news, the technicals say on this that we are coming into a confluent point of resistance on this golden retrace from this level down to this level, and this downtrend of resistance. And look at this. We have a spinning top doji candle, reversal to the upside, big momentum. We can tell by this large bullish engulfing candle, engulfed all the way across. But look at this. The bulls opened here, the open of this candle, and pushed all the way into this golden pocket, which was a strong bullish attempt. And the bears said, absolutely not. This every one of these candles is a battle between bulls and bears. And each candle, if you don't know, each one of these candles is representative of whatever time frame you're looking at. So this is a 1 hour session. This is where the candle opened. The wick is how high price action pushed up. And then wherever it closes is the top of a green candle. A bearish candle is opposite of that. But the bulls tried this and they got rejected right at confluence. And so this is showing if this candle were to close here, we have an hour. So this is what we do. If we have an hour left on a candle, we want to see better resolution. Let's zoom in a little bit. Let's come down to the 30-minute, the 24-minute. Okay, we're at the beginning of the. So we're seeing a lot of fights between the bulls and the bears. Let's go down. Let's go to the 10-minute. I'm going to type in 10-1Z. There we go. So now we can see some resolution with the closed candle. So this candle had increasing momentum to the upside, and now we're seeing waning momentum, meaning that the price action, it's parabolic, and now it's. I have something on my mouse pad. We saw it go parabolic, and then now we can see it, kind of rolling over. And this is what I'm expecting is a pushback down to the downside if this doesn't break through this resistance, which it doesn't look like it's going to, with the golden pocket right above it, as well as this downtrend of resistance, as well as candles rolling over. Now, if we turn the BitLab Market Intelligence on, look at that. We have 3 bearish divergences. I'm going to turn off auto so we can see. So we can see what these are. We have on balance volume divergence right here at the golden pocket. We have money flow index, meaning money flow is the money flows lower than this price action went high. So this price action has had to push up while there's less money involved, meaning there's less fuel in the car. So we're utilizing these multiple time frames and these multiple indicators to get clearer resolution as to what's going on in the market. Now this red right here on significant movement, this is showing that this is likely a trend top. We have the relative extrema sticking out to the upside on this candle already. So that indicated already before this candle, before this next candle closed, that we're likely going to see a little bit of a weakening of the bulls. And now this is exactly what we're seeing. Now we're getting it's starting to look like a bearish harami candle. If this were to close here, if this were to break down, then we have a bearish engulfing candle, and that's even more bearish. But this is looking like we are trying to get bears are trying to get a rejection here. So I'm going to go back to the chat. I saw you guys posted some stuff. Yeah, Crypto Billy. I'm going to do a really quick rundown for everybody. If this is your first time here, I'm going to give you a couple quick keys for TradingView. If you don't know what they are, I did put post in chat any of the ones that you don't know. I like to do. Let's actually pull up a clean chart. Let's do Ethereum so we can map this out. Okay, now we're gonna double click on. If you double click on a chart like this, when you have other indicators up, it minimizes the indicators and gives you just the chart window. Now, what you can do, we can map this out. We can do the same thing for price action on Ethereum. Let's go to the 4 hour. So what we can do here. If you do option J, that gives you a horizontal ray, which means it goes from that point over to the right. If you do option T gives you a trend line. So you don't have to come over here and select trend line. So once you do that, option T, it gives you your trend line. Option H gives you your horizontal line. Option V, by the way, all the options, if you have a PC, that's Alt. Alt V gives you a vertical line. Option F gives you a fib down, or option F, same thing, click and pull up. You get to retrace either direction. What is the last one? Alt enter. If you have multiple charts like this, if you select your chart and press Alt enter, it makes it your main chart, and then Alt enter again goes back. So that's a quick little TradingView quick key lesson. Now let's go to the daily. Let's do Ethereum real quick. So option J, what was that? Option J. Why is this? That's weirdly, very weird. Shouldn't be doing that. Option J. Now, okay. So now here we are. Now we're going to do option F from here. Actually, I'm going to do one more option J here at the bottom. And right here, option J. My knuckles, just so you guys know, when the screen share is off, it's because my knuckles down here where my mouse is have hit the button that have swapped it. My bad. So back again, option J does these horizontal bars. We can do another one right here, option J. Now, in addition to that, we can do option F right here, Alt F if you're on PC, and we can get that 61.8 or the golden pocket sort of fib, which look at this, we're finding resistance right here. This is on Ethereum. Now, moving forward, so option J is these horizontal bars. If you want to just do a full bar, horizontal line all the way across the screen, you can do option or Alt H. That gives you horizontal. Option or Alt V gives you vertical line. And then option T gives you a trend line. So you don't have to, look at that. Resistance, support. So you don't have to come over here and use all these for every single thing you want to do. Now, again, option, if we come back here, the option Alt Enter thing was this. Alt Enter brings up from a multi-screen deal. And then also, if you double click on a chart, minimizes the other indicators you have on the bottoms. So now that I did that again, sorry about that. I do want to we'll finish looking at Ethereum here, and then we can get to some of those questions. So this was the top. I did option F from here, dragged it down to the low here. Let's go ahead and click on this. Yeah, I'm gonna go like that. And we're finding resistance right here at this level, the 16,073 sort of region. And in addition to that, we have this previous price action region all through here. Now, if we come over here and look at the VPVR, let's look at that real quick. Let's go to the 12-hour. Okay, now we're finding resistance here. If we do break through this level, not only is this a huge volume node, but we also have the golden pocket that we have right here. And if we do break through this, next stop would be the 1,820. And if we obviously break that, the next stop there would be about 20,050, 2060, somewhere in there. So those are the first two levels I'm looking at the upside. But same thing as with Bitcoin. If we zoom in here, I'm going to minimize this. If we zoom in here, we can also see that we have not much support below us. We have a thicker shelf. Excuse me. We have a thicker shelf here of volume, and we're sitting on top of the 50 and the 20 moving averages. So Ethereum's looking a little more bullish right now. We're also holding right. Look at that, bounced right at the 50 line. This is on the 12-hour. Now, if we come over here to the BitLab market intelligence trading stack, okay, well, look at that. We have four divergences, bearish divergences that preceded this dip: RSI, on balance volume, money flow index, and volume. And we are looking like a trend top, and we had a bearish divergence on, which I can see just by this H on top. When it's red, it's on top and it's bearish. When it's green, it's on bottom and it's bullish. So this marked right with the divergences as well as showing a trend top. So there's a lot of questionability in the market, which makes sense because we are at this key level. Now, if we break through this, we might end up getting some bullish divergences, because one of the things I want you to note, looking at this 12-hour on Ethereum, we're riding now. We flipped we can see we flipped the EMA ribbon. Now we're bouncing off it, finding support, and we're still finding support on it, although it's starting to collapse a little bit. It's starting to compress, I should say. But on the relative extremo, looking at the 12-hour, this is way far to the downside. And when this is on the opposite side of the cloud and to the downside, it's almost like a pogo stick or a slingshot with bullish pressure back to the upside. So we could see that each time this sticks out, see to the downside, price up, to the downside, price up, to the downside, and we're getting that price action up. But this is right at key support. So I'd be looking for a slight move up and then finding support on this before I entered any sort of long. Now, coming back to the chat, how's everybody doing? Are you bullish or bearish? Yeah. Let's see. Let's see what some of these questions are. As a beginner, what tools would you start with? What's a decent laptop to get for trading? Well, as a beginner, the first tool I would start with is your mind. that sounds so stupid, but it is the truth. The first tool I would start with is digging in and not just following me or not just following any individual YouTuber, or follow a bunch of different people, investigate differences of opinion, different strategies, and really just focus on looking at charts and pulling information out of those charts. You know, trying to read what's happening, understanding candle patterns. Get in BitLab Academy. We have full courses on everything that could be involved here. Psychology of trading, understanding candle patterns, understanding indicators, understanding how to various different trading strategies, integrating different sort of elements, different indicators, or different strategy, and just really spend. I mean, I think my first 3 or 4 years in the space, I watched everything I could, not just crypto YouTube, but trading, forex trading, just really trying to understand what was going on with price action on a chart and how things impacted it and how different signals really played out over time. So that's what I would recommend, is just really focusing on understanding price action, because price action is literally a visual graphed representation of the psychology of the market at any given time. So you're seeing, is the psychology bullish? Well, then if it is overwhelmingly, you're getting bullish price action to the upside. Is a mindset of the market bearish? Then inherently you're going to get price action to the downside. And you can see when you're looking at these different trends on without even using any of the indicators, we can see that these doji candles, these spinning tops, these are marking indecision because we have upside spinning top. Okay, bulls tried to push, nope. Bears came in, bears pushed down, bulls said nope. So there's indecision, but because we had a bullish action and followed by indecision, now price is falling. Now we get sort of a hanging man here. It's the same thing as a hammer, but a hammer tends to be at a bottom like this, which it's basically at a bottom, marking a likely trend reversal to the upside. When you have it mid-trend like this, and also this move to the upside into this is showing indecision and upside, because the bears tried to, this is bullish, and the bears tried to bring this down, and then this continued to the downside. Now we have an actual hammer candle, and this is signifying, no, the bears really tried to push it, and then the bull said, nope, ate it back up, and then we get, so understanding the candle patterns is really, I would say, one of the best things you can do as a new person in the space. Alrighty, let's see what some of these questions were. Let's see. Share your screen. You know what? I got to move where my thing is. Let's come back over here. What were some of these questions? Let's see. I saw one question in there about risk management. So, and how do you know if we can kind of do that real quick? If we were to enter a trade, let's say, I got the screen up. Let's for instance say we're coming up into this resistance zone right here. We're getting some bearishness with the bearish divergences. We're coming into this resistance zone of this golden pocket. There's not a lot of strength coming in. Let's come down to, we're on the macro, so macro midterm on the 12-hour. So now let's come down to the 1 hour. Now we can see, I'm actually going to go even smaller, 24 minutes. Because we saw the midterm fighting into a zone, and now we want to come down to a smaller time frame and see if we're getting any bearishness into this zone. Now look at this, we're getting a lot of indecision in this area, but we are starting to get a printed red area here on significant movement, indicating that it might be a trend top, as we can see right here. Look at this breakdown. Look at this right here, breakdown. Now we're getting this right here, similar. In terms of trend top, we also were coming into that golden pocket. We're getting now RSI and Chaikin money flow bearish divergence. So let's say, and also if we come right here, let's do this option F, drag from there to this bottom. We got rejected. Right. I'm pulling this to the bottom of this wick. God, delete. Okay. Yeah, so you see how I pulled this line to the bottom of this wick, this low, and we can see that this got rejected at the 786. It did break through this golden pocket on this small. This is a very small time frame, so this is kind of par for the course. But we're not really breaking through the EMA ribbon that's here in the background. So let's say we were going to take a short on this. If I were to take a short on this, and this is not financial advice, is I would come over here to the left bar here, and you can click it's 1, 2, 3, 4, 5, 6, 7 down. Click on this little arrow and then come to short position. This thing right here, I put a star on it. So I have mine. I don't know if you can see it here at the bottom. Yeah, I have mine already on here. And what you do, say you wanted to take a short when this hit the 786. Well, what you do is you open up this risk. It's a risk management tool, and you can set your stop loss based on whatever your metrics are. In this case, I would set my stop loss probably about where the high is here, so somewhere in this region, and then I would have a target to the downside. So my target to the downside would be in this case, let's see what my target to the downside would be. This is trying to push up. We're getting higher lows. So this is kind of hard because we're on the 24 minute. Let me zoom out a little bit. Okay, let's go to the 1 hour. Okay, go auto. So what I'd be doing is, let's go ahead and turn off the, okay. What I would be doing with this is, first, let's take another look at this. So we're pushing up. We're getting a little bit of a channel breakout to the upside. So, man, for this, I don't even know if I would short this because of where we're at. If this got higher, I would, but this is what I would do. I would come in here. I would put a short position on this level. Where's it at? This level right about here. You bastard. There we go. And I'd have this somewhere about here, about 1%. And I'd be looking for this one to probably go to this level here, option J. So this would be a 4-to-1 risk reward ratio. So if I were to put the short in and the price action pushed to the upside and got, and continued up, I would lose about 1%. But coming to the downside, I would. This is spot also. This isn't even if you were leveraging. If you were leveraging, of course, it'd be whatever X is that you're doing. If you were leveraging, then of course you'd bring your stop in quite a bit tighter to your entry. I like to do it almost the same X. Say I'm doing 5X, I would be bringing my stop loss, I would divide that 1% down to about 0.35 or so, just above this Fibonacci. Because if you're trading on leverage, you need to have a very clear understanding of what your goal is and what your target is, and you have to have a lot less willingness for price to go a lot less wiggle room for price to go the way. Because if you're doing a 5X trade, which I'm not recommending for anybody, this is once you've learned spot trading. But if you're doing a 5X trade, then you need to essentially have 5X your risk management on each trade. So in this case, if I were doing that and say I was looking for price action to come up to where this previous high is, which is also the 786 on this drop, then I would have my stop loss just above it like it is in case we get a wick to the upside, and then my target would be somewhere down here. And what I would do, if my target's all the way down here, I would be laddering. I'd take some profit right here at where this previous low is, because very likely price could come down there and it very well could reverse, but either way, it's very likely there's going to be interaction with price there, and then I can take some of my risk off the table by taking some profits to this downside and then taking the rest at or a majority of the rest here, and then letting the rest ride to the downside. This way you're breaking up your entry, breaking up your exit, and allowing yourself to protect yourself from risk happening in the market. But I got to go back to the chart now, because we're going to be wrapping out here in a second. Everybody, please throw in two questions and two alts. The alts need to be within the top, I would say, they need to be within the top 100 coin market cap. But put in two questions and two alts you'd like me to read through. I'm not gonna be able to do it on this stream. I'll look at them and I'll try to pick a couple good ones out and a couple ones to do charting on for tomorrow's daily stream at 10:30 a.m. Eastern Standard Time, because that's what we do every day here on BitLab Academy. 10:30 a.m. Eastern Standard Time, getting the look at the market, how how to interact with it. That's what this is all about. I'm not just about doing price action charts and giving you targets. No, I'm going to show you how to find those targets. I'm going to show you why what's happening contextually in the market is affecting it to going down or going up. What's going on with traditional assets as they relate to Bitcoin and crypto, and how we can diversify our portfolios and take these confident, profitable trades consistently over time. But that's what we're doing here. Shout out to everybody. Shout out to the Ada gang, Algo gang. Yeah, Matic. All these things are so great. Help identify divergences with different indicators. Absolutely. I actually have a video planned for me to record this week, which will be one of the lessons that we do here on the BitLab daily streams, the Alpha series. So go through. If you are newer, make sure you're coming through to the BitLab Academy, YouTube page, which is here at BitLab Academy, youtube.com/@BitLab Academy. Come follow, come be in our community. We've got a wonderful community. Everybody so empowering, encouraging, and we're just wonderful growth here. And, you know, I'm trying to be one of those channels, all of us together, where you come here for support, you come here for community, you come here to get away from the trolls all over the rest of crypto, YouTube, and Twitter, and all these things. So make sure before you go, you do come over here, follow the BitLab Academy Twitter page. Make sure you come over here, follow my Twitter page at Kelly Kellum, check out bitlabacademy.com. But with that, that's all I got for you in today's video. I hope you all have a wonderful day, and shout out to everybody over at the Hit Network. Make sure you are coming down here to all these websites and socials. Have a wonderful day. I'll see you in the next daily stream. Adios, muchachos. Adios, muchachos. Thank you for coming, being a part of the community. Adios, muchachos. Thank you for coming. Do-do-do-do-do-do-do. Goodbye, everybody.